Welcome to my channel. I'm Dr. Romano. Today I will give you an update as to my predictions and analysis for the year 2023. I'm going to give you some dates as to when you need to be very careful. As you all know, the real estate market and that real estate cycle has come to an end, and the peak has already passed. You are starting to see 15%, 12% discounts on real estate properties, particularly where I live. And where I live is one of the most expensive places to live. The real estate market has been booming here. We've had an enormous amount of people over the past 6 to 7 years that have moved here, causing our real estate markets to go up and up and up. It is not normal to buy a house and 2 years later it almost doubles. When you see that type of market, that's a type of market that you need to be very afraid of. Before we continue the video, please do thumbs up. It's right there. Just press the button to say thank you, Anthony. Thank you so much. The reason why our real estate market has gone up so much over the past 10 years, particularly over the past 15 years, we've had an enormous amount of foreign buyers that have came to America to park their cash in the American real estate market. Now, it didn't just matter if it was only Asia or Russia or wherever it was, but that particular country out there, it's a large country to begin with. They've seen their economic boom from the year 2000 to 2022. That particular country did very well, and based on how well they did over that past 20-year cycle, because that country did so well for so long, you have to ask yourself, well, what happens when the American market slows down? If you remember back in the 70s, 80s time period, Korea and Japan, they were seeing their economic boom. And by the 1980s, as the American market slowed down, it put the Asian country, Japan, into a very bad financial situation. In other words, they received their market growth in their country because of we Americans buying their products. If you remember, we had many types of TV companies making TVs here in America. And you had RCA, you had Zenith, and so forth, and the radio companies, etc. But once it was apparent that Japan was allowed to export those type of electronics to us, you started to see the collapse of the American electronic industry. So once the economy, because of 1987, the collapse of the stock market, because of the computer algorithms, trading, it caused basically a collapse in the stock market when there should not have been a collapse. And because of that, everyone else had to sell, causing a one-day disaster in the financial markets until the government fixed the situation. But because of how much money was lost in one day or 2 days or a week, it put a lot of companies out of business. And it set pat the layoffs that happened in America in the early 19s, the late 1980s and the early 1990s. And it wasn't until 1994 to 1996 that we had a president that realized that instead of fixing the trade imbalancement that was going to happen in the future, he decided to allow it to go unchecked, which then we had China and the rest of the world start dumping products in America. It caused a tremendous economic boom in their countries. And this is when money started to flow outside of America, and they started to invest in Asia. Russia, if you remember. You also had the Russians in the 1980s and 90s coming to America and buying up American real estate. You had Russian billionaires buying up American real estate in the 1990s, and by the end of the 90s, the 2008, 2009, the collapses were apparent. So it's just another cycle, another country that has to deal with being able to trade in our country and to be able to sell their products in our country. And the question is, how does it affect us, we the people? Well, it affected us greatly, because what happened was the president in the 1990s, mid-1990s, he decided instead of fixing that trade issue, because he couldn't, because the way the government, the US government, how they negotiated trade deals was based on allowing that country to trade in our country and to sell their goods and stuff in our country, with the notion that if we let you trade in our country, you will do what we want. That cycle has come to an end. And if you push it forward from 2000 to 2022, you will see which country benefited most from that next cycle, and that was China and Asia. Now that cycle has ended, and the American government can no longer do trade deals. It has weakened our foundation of our country. The government was allowed to play around with the real estate market and making a bubble, which was in 2008 and 9, but they continued it because it didn't really affect us like today it's going to affect us. So they allowed it to ride continually until today. And so now our government is so resilient to change, and they always change at the last minute because they do an incredible job. And if you think our country is terrible, well, have you ever lived abroad? Things don't change much. So now our government has changed once again, and they are taking back imports. They are taking back manufacturing because they can no longer allow the infrastructure, the manufacturing of our country to dwindle even further. Secondly, they realize they can't have the real estate market to go up any more than it has, because without that big Asian country that I mentioned, who's going to buy the real estate now? So in other words, once they pull out of our country, or they dwindle down to buy up real estate in our country because they're having an economic crisis, and that is apparent right now, that means that the American real estate market will literally collapse. And there are people such as Ray Dalio and a number of people that say that we will have a collapse of 50%. He is 100% right. Because this time around, when you look at the interest rate issue, it's not interest rates and inflation is the issue. They're just saying that. It's the treasury market, as I mentioned in other videos. So when you look at what's happening in the treasury market, what is actually happening? Well, we have a country in Asia that is literally going bankrupt, and eventually, if they don't pull out of our treasury market to pay their own bills and deal with their own crisis, then they will default on their loans. That particular country can't just print money like the American government can. The reason why the American government is allowed to do that is because, one, we are a superpower, and our GDP per household is the highest in the world. Our average income is the highest in the world. So to say that that Asian country was going to take us over and they were going to do more, it's not true. Because the average person in that country, the average income is not even $7,000 per year. Our average income is the average teacher's starting salary, which is 40-something thousand. Right now it's probably a little higher. What the problem is, how do you create another economic boom to offset that? Well, the government can't lower interest rates now because they have to deal with the treasury market, meaning they want you and me to go buy savings bonds at the local banks. And that's what's happening now. Eventually, you'll be able to basically invest your money and get a 6-7% return. If they do that, which they have to, then the treasury market will be stabilized once again. As you already know, that I mentioned in other videos, the government changed their policy. They created another part of the government. They will be the buyer of last resort. So as the Asian countries pull out of the treasury market to pay their own bills and their crisis to deal with, it's not that we're being threatened. I mean, in the same possibility, maybe it is a threat because they realize they're going to go to war. But they already signed an agreement with the American government that if there is a war between the two countries, that the American government is not going to confiscate all that wealth. Who knows what's going to happen? But the situation is how are you going to benefit from this change? Now, this is where I'm a doctor of finance and I'm advising you, the public, to understand where you're supposed to position yourself. So since you made a nice hefty income in the real estate market and your house doubled or tripled, and you've been able to build houses or you did something in the real estate sector, even whether it was painting houses or being a plumber or someone who was a big developer, because of interest rates going up so high, the future projects that developers are going to or want to develop, they have to pull back because it's going to cost more for them to borrow money. That's a higher expense. So larger developers aren't going to be developing so many properties because if there's a 30% discount, well, how does a developer make money, right? With higher interest rates, even if the price of sheetrock and plywood goes down 50%, which I don't believe it could, but maybe it could. Because if you have those Asian buyers not buying in America like they were, then there'll be less competition in the American markets, which means, of course, the price of a house is going to go down by 50%. Like Ray Dalio is saying, I had predicted a 30% drop, but it's not possible a 30% drop because we're already down 12-15%. And the economy has not even been affected by high interest rates. That takes 2 to 4 years for it to happen. Because, as I just said, because developers takes 5 to 4 years to develop those properties. So now what you're going to see is a pullback of development. All those large office buildings that are going to be built supposedly, they're going to have to pull back on them because who's going to rent them? They have to increase the rents in order to offset the costs, just like in the apartment sector. They can't raise apartment prices any more than they already have. Because of interest rates being so high, you're going to have a lot of people not purchasing houses until it goes down. And the question is, how long will it take? Will it take 2 years before we hit rock bottom? I don't believe that it's going to be 2 years. Because look at it this way. So already, based on my analysis, this is where the juicy information is. Based on my analysis, the first quarter of 2023 is going to be a very bad quarter. And why do I say that? The first sector is the advertising sector to lay off. We already know they have, okay? Why do they do that? Because companies are pulling back on spending money for advertising budget. So you already know that the companies are in bad situation. It's not just COVID. A lot of companies borrowed a lot of money. The problem is when the pullback happens, they have to also pull back because there's less business. So what do? They also start to lay off. And that is going to happen in 2023 and 2024. Next, you will have the investment banking sector lay off more people because people are making less money, which means that they don't have so much money to put away. They don't have so much money to put away in their investment account, etc. So the investment banks lay off. That's the last cycle of the layoffs, is the investment bank sector to lay off. And when that happens, it takes about 1 year to 2 years from there for the markets to potentially be at the bottom. It just depends what's going on with interest rates, but this time around, as you know, interest rates can't go down to save us because of the treasury market, because the government wants us to invest in not just treasuries, but savings bonds, savings vehicles, etc. Yes, the government has made sure that that particular market is going to be liquid, but that means the government has to print more money. So if they print more money, to deal with the treasury market, meaning to be the buyer of last resort, because that Asian country is dumping all their treasuries because they have problems, well, in that case, then that will be okay. What happens to the dollar? It becomes more watered down. So inflation happens once again. It's just a vicious cycle that's happening now. And I prayed for a very long time that this cycle would actually happen, and it starts when it started. I didn't know when it would start, but when I was a younger kid, I kept saying there was something wrong with America and how long it was going to take. Well, I'm living that era now, and that's the manufacturing sector. So once again, the government will take back the wealth from other countries and bring it back to America, because there's something called the big and little island effect in economics. So think about this. You have the big island that makes all the products, all the everything, and it gets shipped to the little islands. But if the little islands don't have any type of way to make money, eventually their savings is going to be diminished. Right? It's simple. In other words, if you go and you move to an island that has no economic nothing, and you move there with your savings, how long does it take for you to run out of your savings because you have to buy all the products from the big island? Well, that's what's happened. The big island was the rest of the world producing all our products, and the little island was we, America. When we opened the trade deals and the global trade, as they called it, it wasn't just to open up global trade, okay? That's called globalization. That's a fake term. What we understand, and the real reason behind that, is because of government negotiations. After the World War ended, our government could no longer lend other countries money and say, you have to buy our products and we'll lend you this money. That's where you get the boom of the 1940s, 50s, and 60s. And then finally that ended in 1970s. Then it was apparent that Richard Nixon took over, and he realized, well, those people in the government realized that if they were going to start this new cycle and this new form of negotiations by allowing other countries to sell their products in this country, but you have to do what we want you to do. That was the New Deal. And it just ended now. In 2021 to 2022 was the end of that cycle. You could guarantee you for the next 30 years, our manufacturing sector will grow and grow and grow. And over the next 30 years, because we take back that wealth, meaning that the Americans make money and they spend it in their own country, and this country makes the products, multiple families make the products and make money, etc. So when you have a factory, you not only employ strangers, but you're employing your family as well, your cousins, etc. So it's a whole new cycle that's coming back. And it doesn't matter whether it costs so much and it costs this and that. It's not true at all. Because if you look back then, in the 1950s, your grandparents were able to pay for a house cash. Your parents were able to buy a car cash, go on vacation for a month with cash. So it's not that they were making so much money, it's that the products were being made in America and it was circulating in our country. Everybody makes money when there's a manufacturing cycle that starts. So for those people that have purchased houses, you made double or 40%, whatever it is, you should sell your house now before it goes down anymore, because you could wait 2 years, rent an apartment for cheap, and then go build a house because the building market will be cheap. That's my advice to you, is to find something that you could make here in America. It doesn't have to be a high-tech item. High-tech items cost a lot of money to make. You should be focusing on the non-high-tech items, like even blankets or socks or whatever people use in a struggling market. So people still buy socks and underwear. People still buy blankets, baby blankets. People still buy spatulas and kitchen stuff. People still buy carpets. Exactly. So there's so many products that you could make for the house. I'm not just talking about the house that you live in. I'm not talking about redecorating. No, that's a different type of market. I'm talking about the basic products people need. Now, as for the financial markets of 2023, we will have a terrible first quarter. And by the end of the first quarter, the stock market will react to that. Not only will it react to that, but we may have a day during that time that it may go down a lot, as it did in September and October of 2022. My prediction, again, will be the stock market will start to trade sideways until mid-November. I think you know why, because the elections are coming up. Once we know who actually takes over the White House, the stock market will either go up, skyrocket. So you could position yourself in November to prepare yourself to invest in the stock market. And you could go long on a particular, you will know what the outcome is the sooner we get there. And the reason why the markets would go up is because one party wants to lower taxes and the other party wants to increase taxes. So you'll know the outcome immediately when that party wins. Trading with the financial politics is an incredible, important strategy to understand. And when you understand it in depth, such as if you follow the stocks and the investments that our senators buy and sell, you will know where the markets go. That particular information is one of the most important informations that you could use to predict the financial markets. You could also predict which markets will be doing well or not. So that's my prediction for 2023. Be very careful the first quarter of 2023, and then again in the November time period, once we know who actually takes over. And you will know 3 months prior to November, that particular summer time period, the stock market will trade sideways. And we will have to deal with interest rates once again going up. I want to thank you so much for watching my video. Please remember to subscribe to my channel and do thumbs up to say thank you. It's right there. All you have to do is press it. Thank you so much.